Right, it's a big week for the housing sector. The latest data just out from realestate.co.nz shows rents may have peaked and have started to fall. However, it's mixed news if you're buying. While more listings are expected to flood the market with the Bright Line test going from 10 to 2 years today, new rules mean you're likely to be able to borrow less from your bank. They're called debt-to-income ratios, and it means banks will cap lending at 6 times your household earnings or household income. Vanessa Williams is with realestate.co.nz and joins us now. Vanessa, nice to see you. Welcome.
Good morning, Duncan.
Lots going on. July 1's a big day for housing, isn't it?
Oh, huge day. Investors, first home buyers, lending, when I'm going to sell my house. Yeah, there's a lot going on today.
Okay, let's look at rents firstly. Your data, what does it show?
Yeah, so we've had a very interesting year. Typically the biggest rental months are January, as you can well imagine, start the new year change, and then 6 months later in June. But we saw a huge May. For some strange reason, we were up 40% on our peak month typically for May. So what is that sort of telling us? Anecdotally, we're hearing out there that there was sort of a lot of investors that went around February, March going, actually, Bright Line test's going to change. I'll take my property, take the tenants out, get it ready for sale, and then have actually changed their mind given that property prices have been flat for basically 18 months, and they're going, do I want to sell at the base of the market?
So they put the people back in the houses, have they?
Yeah, well, trying to.
And what are rents doing?
And so rents have actually softened this month. We saw a record high last month and we have seen them soften. Will that trend continue? We'll need to kind of get a couple more months under our belt, but it is nice to see a bit of reprieve there.
Is it much of a sort of drop back?
About $10 a week. So not bad.
But so is the tax cut.
Exactly, yeah.
In terms of, so is that in some areas or is that all areas? Or
that's nationally, that's right across. And it differs a bit depending on the demand in there, but we are actually hearing that quite a few people who have got rental properties on the market at the moment trying to find tenants are actually struggling and have to rethink their expectations.
Right. Is there some parts of the country where rents have dropped quicker than others?
Not off the top of my head. It's sort of been a bit of a rocky piece, but as I said, I'm really keen to see how this trend, whether it continues more or not. It would be nice to see those soften a wee bit.
Is this just the first month, is it? Is this the first few weeks of it?
Yeah, this is the first month.
Okay, and how long do you take to pick up a trend? Is it 3 months?
Typically 3 months, to sort of see if it's really going to stick at it or not.
Interesting though, because with July the 1st comes the Bright Line test changes as well. We'll talk about debt to income shortly, but Bright Line tests go from 10 to 2 years. 10 years was always ridiculous.
It's quite a long time.
It was ridiculous. I mean, no one flips a house in 10 years.
No, well, that's not a flip,
is it?
That's a double. Typically our houses double in 10 years.
Yeah. So it goes from 10 to 2 years. So those people, I'm told by some of the data agencies that a lot of the houses will go on the market today. A lot of mum and dad investors who are struggling with the rents and so forth, not covering the mortgages, are going to dump their properties on the market.
Yeah, and you see, that's really interesting because we have got total stock numbers back to where they were in 2015. So we're talking upwards of 33,000 homes on the market at the moment. And just to put that into a bit of context, 33,000 at the moment. Our bottom of the absolute market was in August 2022, and that was 12,500.
Oh, gee, was it?
Yeah, so when you look at that as a difference, so we're sort of around that upper 33,000 mark at the moment. So there's actually already a lot of stock on the market.
What's been the most we've had on the market at any one time? Do you recall?
About 60,000.
60,000?
Yeah.
Okay, so we're about halfway where we have normally been.
Yeah, well, normally is probably that was the absolute peak when we're real buyer's market where there's not a lot happening.
Well, my understanding is that a lot of mum and dads are doing it a bit tough on some. They have 2 or 3 rentals, and it's not covering the bills. And they may dump them. Up to 10,000 homes could go on the market in the next week or so, which would seem a lot, wouldn't it?
That is a lot, because you think about a typical month, we see between 8 and 10,000 in total. To have an additional, that would basically double the amount of new listings.
It would, but it's been ridiculous, the 10-year flipping. So no one could do anything.
Yeah.
No one could do anything.
Yeah.
They couldn't move.
Yeah, exactly. So to be fair to that, though, the new builds, they were a 5-year, which sort of feels a little bit, more realistic.
Still not flipping. No, that's not flipping.
No, that's not flipping. No, you're right.
So everyone's been flipping having to hold it. They've had to hold their places. They might have bought them in 2020, but they can't sell them until now.
Yes, that's correct. And like if you bought it in 2020, that would be a bit of a challenging time as well, because you've got to think that was sort of 2020, 2021, absolute peak of the market. We've softened by about 15% since then. So if you are perhaps looking to transact in that time, you're probably not going to have made any capital gain.
So house prices are 15% lower than they were in 2020.
At the peak of 2022, so that January, we're about $1 million.
Yeah.
And now they're about 860.
See, so people who've bought at that time,
Yep.
it's probably best to hold, isn't it?
It will be. So I was looking at the data this morning actually, and in 2020 and 2021, about 7% of our homes transacted.
Yeah. The debt-to-income ratios, which come into effect today as well, explain that to people.
So that debt-to-income, or what you might hear in the news, is called DTIs. So effectively, it's to help our financial stability here in New Zealand. It's not uncommon globally. It's pretty common, but the idea was, and these conversations, you've got to remember, started in 2021 when we had really low interest rates, really high house prices, and people going, this is great, let's get on board. And what we have seen is that now that we're in the softening market, that it puts us at a bit of risk.
But banks are doing their own debt-to-income anyway, aren't they? The banks don't lend more than they think someone can afford, do they?
Yeah, but I mean, you've got to look at the last couple of years and some of those really low interest rates, but those really healthy house prices. I think there will be some people who are hurting at the moment. And, I don't think it's bad for the New Zealand economy to have more financial rigour in place to ensure we don't get into unmanageable debt.
Yeah, it's about stability, isn't it? Financial stability. But if you have a household income of 126,000, let's say household income, the most you can borrow, I think, is about 756.
Yeah.
So if you're at an average house price in Auckland of, what is it?
About $1 million, $1.1 million.
So arguably you put up your deposit and you get your borrowings and you almost don't even make it.
You're just there. But household incomes in Auckland are a bit higher than national.
Sure.
So we are, but I think people are really going to have to relook at these pieces both ways. So people who are buying, but you've also got to remember the supply side as well. So
could this drive house prices down, the debt to income?
I think they're going to have to look at it, right? So if you've got a house price now if you've got a house for sale, effectively now the buyer's going to have a ceiling. So there's only so much you'll be able to command as a seller.
Yeah, and you can't say, well, just squeeze them a little bit more. You can't. I'm at my debt level. I can't go any further.
Yep. Yes.
This is it.
Yes. So if you're borrowing too much more than that, then we're putting ourselves into an unmanageable position as well. So we've got to be mindful of that.
These are really significant changes. Where's the market going in terms of? See, I think we're probably almost at the bottom of that market now with house prices and with interest rates, and it's only, now it's the time to go down. In terms of interest rates, down. I
also agree, and I think our inflation has got a bit more manageable here in New Zealand.
Yep.
Yeah, it's there or thereabouts.
We're so close now to that.
Yeah.
So do you think this is the bottom? Is this the bottom of the market, do you think?
I do believe so. I do think, and given that it's been flat now for 18 months, so basically nationally we've only moved between 860 and 890 for 18 months. So you kind of go.
Has it gone backwards in 18 months or just flat?
Nah, just flat. Just flat. When it dropped down was in 2022. We saw it go from $1 million to basically 850 over in 12 months, a 15% drop in a year.
Yeah. Nice to see you. All the very best.
Lovely to see you.
Thanks for making it so clear for us too.
No problems.
Garner.